What's your story? Whether you're a client or an independent financial advisor, we know you face many important decisions that can affect your and your clients' long-term financial success. Welcome to the WIN Podcast, What's Important Now with Corey Heimensen, accredited investment fiduciary and president of Heimensen Wealth Advisors. In this podcast, Corey helps you identify your goals and objectives through financial education and comprehensive planning, while inspiring you to make better behavioral decisions in your personal finance. With a twist on pop culture and current events, join us as we explore growth and protection strategies for individuals, advisors, and their businesses. Come and discover what's important to you now.
Hello, and welcome to the What's Important Now podcast, or the WIN podcast, as we like to call it, with your host, Corey Heimensen. Corey, it's always a pleasure to be with you, but today's podcast is interesting, judging from the notes that we've got here, so people might be really compelled or, maybe not. We'll have to see. Where do you want to start?
Well, there you go. I mean, sometimes it's good to just reflect. I think,
yes.
You know what I mean? And to look backwards. Obviously, I'm in a business where everybody's always asking me to look forward, but it's hard to look forward if you don't have a good understanding or a grasp of what already happened, or the water that went under the bridge already.
Well, yeah, and there's that old quote about those who don't remember history or, to repeat it.
Yeah, there you go. And so half jokingly, we always slap a title on these things. So this one's called Two Finance Guys and Their Life Lessons, which basically means you're one of the finance guys today.
I was going to say, wait. There's only one of you in the room.
I'm sure your business card doesn't say finance guy, but I guess mine sort of does. So we're both going to wear the hat today.
All right.
And what we're going to do, this is, obviously we want to entertain a little and bring some interesting pieces to people, but I've got a few things on my list. I know you've got a few thoughts to throw out too, but we want to look at events in history that maybe stuck with us, maybe from a financial standpoint, maybe from just the way our country has developed. And I'm not going back 200 years here. I'm going back, a few decades, 3-4 decades. And the first one on my list is Enron. The old, I was going to call it a utility company, but I mean, this was way bigger than a utility company. And for those listeners that don't really understand what we're talking about, I mean, this was essentially one of the largest companies in the United States, in the late 90s, early 2000s-ish. I think they were maybe like up to number 7 on the S&P 500 in size.
They were, I don't remember where they were, but they were huge.
Market cap, And I even bought into this too, to some extent. I was a personal, I owned some common stock shares in my accounts in Enron as this was unfolding. And for a long while in the late 90s, thing was like a rocket ship going up. I mean, they benefited because, yes, they were a conglomerate that did a lot of things with pipelines and I guess you'd say utilities, but they started really, juicing this thing when they essentially started trading energy futures, and almost. Yeah,
I was going to say, we probably, for a lot of the audience, ought to just sort of define what the company was, because as you mentioned, happened in the mid to late 90s. And there are a lot of people who probably sadly don't know what Enron was.
Yeah. No, you're a good point there. I mean, I think it honestly started as a utility company.
Yeah,
and they started buying up smaller utility companies, and they just kept getting bigger and bigger and bigger. And then they would start essentially, let's say, trading electricity, meaning, they owned factories that made electricity, utility type companies. So they essentially found ways to trade their extra capacity of utilities and electricity and natural gas. And I mean, this is complicated stuff.
And to your point, actually, it was extremely complicated stuff.
Yeah, and they kept piling this on, and the earnings and the revenues kept going up and up, and the stock kept going up, and everybody's thinking this is the next greatest, largest company ever. And then, as things do, reality sort of sets in.
Yeah.
And my interpretation of this is when reality set in was when they really started enforcing what they call mark-to-market rules, which essentially made them not be able to just say that they couldn't really fabricate what the value was of their electricity contracts.
Well, yeah, this was a company that looked, God, it was extremely sexy. It had great numbers. It was going gangbusters. Everything looked fantastic. And then the rules changed, and it exposed the company for what it really was, which was essentially one gigantic, huge accounting fraud.
Yeah, they were cooking the books. I mean, and I don't know how deep it went, but it certainly was at the top of the organization, the top 2-3 guys.
Yeah.
And I'm sure there was managers below them that knew what was going on too. But funny story here. This is like 2001, and I remember this like it's yesterday. So I owned these shares. Stock's starting to come down, and it's like I'm still scratching my head. It's like this doesn't make sense. And I'm out mowing my lawn with a push lawnmower. I can remember this just like it's yesterday. Amazing. And it's this people, my wife is not going to believe this story because yes, I used to mow once in a while, but now she has kind of taken over the chore. And, we joke that she's my snow shoveling and grass mowing department.
She's your landscaper.
Yeah. But I still remember this. So if you see me pushing a lawnmower or grabbing it somewhere out of the garage, this damn story comes back to me every time. It's just so weird. Wow. But I remember mowing. And just thinking, I can't wrap my head around this. It doesn't make sense. This company is solid. It's had good stuff. I don't know why the stock's going down. Well, as you can imagine, it kept going down, and eventually I cut the loss and, got out of there well in advance of the complete disaster. But they were doing things that were so complicated in their accounting department that even the analysts on Wall Street couldn't figure this stuff out.
Exactly.
Until it really hit rock bottom. And these corporate guys, Skilling, Fastow, I can't even think of the CEO's name. All these guys, they were really sharp, smooth characters. I think. I never met these guys.
Well, I did. That's that's my part of the story. Is that in like 96 or 7, I actually interviewed Jeff Skilling on a show that I was anchoring on CNN FN at the time. And I remember sitting there. In fact, it's funny. Now we're talking about I remember sitting there at the anchor desk, and I remember looking at him, and he was as charming and as smart and as intelligent and as likable as could be. And it was a huge lesson for me because the man was a total crook. He is a convicted criminal. Okay, so I can say this: he's a convicted criminal. He was a complete crook, and he was as charming as could be at the time, before all of it had been exposed. And I remember thinking, always maintain a little bit of skeptical distance when you're talking with people, especially from Wall Street, because unless you really, really, really are tight and close to them, you don't know what's happening. Right. It was a huge lesson for me.
That's interesting. And I remember the name now. The CEO was Kenneth Lay.
Yes, Ken Lay. That's right.
And he looked like he could be somebody's grandpa.
Oh, yeah. Yeah.
But shit, he was in the middle of this thing too, and he had to be.
Well, these guys all ended up in jail.
Yeah. And it does show you. And I think the real takeaway, we're not here to talk for 30 minutes on this topic, but I mean, the real takeaway is, and you alluded to it there. I mean, if you can't understand something, you probably shouldn't invest in it.
Yeah.
To a major extent, and this
a very old saw from Warren Buffett, as a matter of fact.
Yeah. And honestly, I think there's a book about these guys and the whole situation. It was like the smartest guys in the room or something. I think the name of it was, but it's just interesting to me. They would buy oil tankers or barges in an entity and then lease it back to themselves and somehow make money in that accounting transaction. You know what I mean? It was so complicated. But anyway, I know we got to move on. But I mean, point being, I get people all the time that ask me, hey, you know, I hear there's a shrimp farm going up here in Minnesota or somewhere, Colorado. You know, should I go invest in that? It's a private deal. Some guy knows a guy. You know, it's like, there's risk. You know, that's the point of this. Do you understand what you're getting into? You know, that's what I'm trying to lay the groundwork to here, you know.
Yeah, and to underscore that, if you don't understand something, ask questions. And after asking questions, if you don't understand it, really ask yourself genuinely whether you should be investing in something that you don't understand.
And for most people, we joke about this too. It's not about hitting that magical money home run to change your future self or your future financial wealth. You know,
yeah.
Just do the right thing and enjoy the things you enjoy, and that's going to be the wealth you really want to have. Money's good, oxygen's good, but I mean, still, you know, there's a lot of other things.
Well, no, that's very true. You know, it's funny talking about all of this. It reminds me of Bernie Madoff. Speaking of things too good to be true.
Oh man, yeah. A lot of people would like to have met him in a dark alley.
Oh Lord.
Yeah, you know, Madoff, boy, and you're from out in that neck of the woods, essentially, you know. But you know, here's a guy for our listeners. But you know, maybe some people don't know this story either. But you know, essentially, he was a high-end New York City smart guy, great investment manager.
Miss investment fund. Can't miss it, boys and girls. Look at these returns. Double percentage returns year after year. Why would you not want to be in this great, fantastic investment vehicle?
And the way I understand it, from the most part, you had to know somebody who knew somebody to even get in.
Oh, yeah.
Like you couldn't.
That was even more brilliant, right?
Yeah, you couldn't
they were running ads. It was Bill calling up Corey, going, Corey, God, I can't believe this, man. You've got to get in on this. And Corey calling up, you know, Zed. Hey, Zed, you got to get in on this.
Yeah, you couldn't just go online or mail in a postcard and get a prospectus sent to you and you write a check. No, this was the elite of the elite, you know. And we referred to that in the last podcast, you know, like the owners of the New York Mets. I mean, these are people with not millions. These are people with maybe $1 billion.
Yes. No.
Into the event, you know.
I mean, and a lot of well-known celebrities, you know, got caught up in this. Kevin Bacon and his wife lost their shirts in this.
Don't you think? And this isn't it funny? Isn't it funny that not just celebrities or really, really rich people fall for this same thing that we're talking about? I mean, this is common everyday people too. That dream, that feeling that you can be somebody by being included in something that's just so awesome and going to change your life and make you money. Same thing as we said before. If it doesn't quite make sense or it quacks like a duck, you know. And so for listeners, basically this guy was essentially running a Ponzi scheme where he just would create fake statements, mail them out to you and say, you made 15.5% again this year. It's amazing. I do this like clockwork. Wall Street's so easy. You say it out loud and it's like, why would anybody write that? I know,
I was going to say, it wasn't like a Ponzi scheme. It was exactly a Ponzi scheme. I mean, if you don't understand what Ponzi schemes are, and you really want a good example of what one is, go look up the Bernie Madoff scandal, because this is exactly what it was.
And the amazing part, this wasn't just for a few years.
No.
He ran this thing for decades. Yeah. I don't even know if the regulators ever figured out how long he had been doing it, but I think it went back into the 70s.
The losses were in the billions of dollars for investors. And I don't think I think there's still a custodian out there looking for money.
I think you're right. I think they still have distributions coming out whenever they can find something.
Yeah.
You know, but he at least one of his sons, if not two, were part of the organization, the company. I think one of them actually committed suicide.
Yes.
So there's a lot of sadness inside the family tree too. But boy, a lot of it seems like it was built and developed from the family tree also.
Yeah, and what's funny here, Corey, not funny, but ironic, is, you know, the Enron says if you don't understand something, you probably shouldn't invest in it. This one's got one of those investing cliches tied to it as well.
Well, yeah, and this, I can even go a different tangent on that and say, you know, it's the old greed and fear type adage. So even these smart people, once they started getting their statements and things are working for a year or 2 or 10 years in a row, they kept piling more money in. They kept chasing good money after bad money. And eventually then, you're overextended and everything's not diversified and it's a scam. And then you really get kicked in the tail.
Yeah. And it's worth remembering if it seems like it's too good to be true.
Yeah. And so my takeaway here, is also tying into, what we already said below, at least Enron was a public company where you could see the price of the shares every day and sell when you wanted to sell. So that's a different breed of cat. What we're talking about here, when you're going into a hedge fund essentially, or into a private investment, you're at the mercy of what this thing's really valued at. Your money is not held at a custodian firm like a large firm that segregates and holds the investment money in a separate bucket from their operating money. This is just Madoff's checking account and he's figuring out who gets what. Not ideal. So again, if you don't understand it, people can succeed financially without getting into the super, super deep end of the pool, so to speak, with dangerous things.
So what's next?
Yeah, let's throw it back to you. I know you've got some good stories from earlier in your career that maybe shaped things.
The quickest one was at the really early part of my career, which was the stock market crash of October 1987. And what was interesting about that was that I worked for CNN at the time, at CNN Business News, and we covered that huge collapse. And in fact, we ended up winning a George Foster Peabody for our coverage of it. But when it all collapsed, when it all fell, and it was just financially disastrous, and we were down at the New York Stock Exchange, and we couldn't get the New York Stock Exchange to understand or recognize it was important. And there were all these news trucks and all these satellite trucks. And we packed that Wall Street area. It was impossible to move down there, as a matter of fact. There were so many reporters wanting to know what was going on. And the New York Stock Exchange did not want to participate. They didn't want to let people in. They didn't want to let people be interviewed. They wanted to control everything. They wanted to shut it all down. And, that moment in financial journalism changed everything we know actually about businesses coverage today, because eventually the stock exchange realized it wasn't going to go away if they didn't talk about it.
Right.
It wasn't, the information wasn't going to not flow if they didn't control it. And ultimately the New York Stock Exchange had to recognize we may as well fulfill our role in terms of letting people know what's going on. And so while people today think that it is routine that we have access to reporters in markets and, we can get to analysts and ask questions, it wasn't until that moment, really, that, it suddenly became reality. And it changed everything in terms of the way we look at financial news. And for that moment in history, we can all be grateful. There are a couple of lessons that come out of it, but from the news perspective, it changed everything and everything today about the way markets are reported and the access that you have to stock markets and the information that is in those markets. So it was interesting. The other one you can speak to as an investment professional is that, it's a reminder that don't panic, I guess is the simplest way to put it.
Yeah, you've got my head going in so many different directions. I don't even know which one to tackle first. The panic one's easy. You're exactly right. Not everybody. A lot of people remember the crash of 87, but they don't remember what the market did the following day or that year. Right. The market was actually up that year, if I remember correctly.
The market ended the year up, but there was about a week where it was so bloody. It was just so uncertain. It was so scary.
Yeah. And to that point, there's a really good takeaway there. The key to life is having cash flow or reserves that can take care of near-term expenses or expenditures. You know what I mean? Don't have every dollar you own in the stock market, because there are days and years where things get out of whack in pricing and they're down. And the market doesn't just ratchet up 9% a year. While that's the long range historical average of the S&P 500, there's years where it goes up 40% and down 40%. So it's built for extreme movements. So the long game is how you win. And you take the emotion out of it, or you have people on your team that help you take the emotion out of it, so you can just not panic and ignore those things.
Well, there's also it's funny too, because to my way of seeing these things, 9/11 underscored the same lesson. Corey, because when 9/11 happened, they had to evacuate the stock exchange. They had to close it. Markets collapsed. It was another event in life over which you didn't have any control.
Yeah.
Just like when the market crashed in 87, all those investors didn't have any control. Same thing on 9/11. Same thing on 9/11.
Yeah. And I remember that too. My brother-in-law called me, I think it was 2 days after 9/11. He lives across the country, and he's like, well, what's the market going to do when they reopen this thing? I'm like, I have no idea. It's going to go down. Yeah, I had no idea if we were talking 10% down, 60% down. Yeah, I had no idea. And nobody had any idea. And I think a lot of this goes back to what you were, saying about the 87 crash. Think of how better our world is today because of information flow, so to speak,
right.
Data. So to go back to the 80s or 87, this is a time when if people wanted to see what happened in the markets today, they had to watch Moneyline with Lou Dobbs, or the Nightly Business Report, or they waited till, I don't know if it was Friday night or Saturday when This Week with Louis Rukeyser came out.
Yeah.
You know what I mean? And then
Louis Rukeyser, gosh.
Or you waited till the following day to get the Wall Street Journal to see if your stock shares went up by an 1/8 or a 1/16, because that's how things traded back then. And now we trade in fractions of a penny. And it doesn't
You're
matter.
giving me flashbacks to scanning the stock pages.
I know for a fact my father, when he was working, I think he took easily a half an hour or an hour a day when he was at work the next day to, just look up the 17 or 20 stocks he owned and see,
right. Totally.
Or, well, hell, I even remember when the internet came out and you can get stock quotes and you had to wait and dial up and then watch them scroll across the bottom.
God.
And I never subscribed to a Bloomberg machine or, any of this high-end Wall Street stuff. And I wasn't alive when the ticker tape was in play, back in the 20s or whatever. But, information improves and flows. And I think that's a good thing to a certain extent, so people that trade stocks on their own on, some of these online platforms, and they sit there and look at and watch every tick penny by penny, day by day, or I shouldn't say day, minute by minute, second by second, that's too much. You make bad decisions when you overthink stuff.
That's a whole different set of investment advice. It's like, there are people who are convinced that they can, find their way to utopia by sitting and day trading. And I think a lot of people have realized that while they can do that, it may not necessarily be their path to utopia, as a matter of fact. And they're better served by, seeking out the services of a financial advisor who can, if nothing else, provide a check on them by asking questions.
Yeah. And if clients look me in the eye and they say they want me to look forward and project things, the one thing I can project is there's going to be horrific events that are going to happen in people's lives or in our country, like a 9/11. Things like that will happen in history. Do they happen every year? No. But there's always things, and you can't control all of these things, how good or bad they are, but you can adapt and make the best of any situation. And, and I guess I would argue that our country is a better place today since looking at 9/11, just with time and different things that have evolved from that. And, I know that can be debated probably, but I'm a capitalist and I'm an American and I'm an optimist, and so all of these things are going to be better next year and 20 years from now and in the next generation if you just want my
No,
opinion.
you're absolutely right. There are certain things that, we can learn from history looking back at them, that some of them are tried and true, and you think, oh, they're so cliche. If I don't understand it, don't invest in it. If it's too good to be true, it probably is.
Well,
But those sayings, as somebody once said, stereotypes exist for a reason. Those sayings exist for a reason. They're true.
That's a good line. And I think a lot of people take for granted how fragile our whole financial system is, so to speak. And yep. maybe that's not the right statement to say. But I mean, what I want to say is trust and faith in the system is a really, really big deal when it comes to banking or when it comes to investment platforms and companies. Right. You know what I mean? We've seen that before too. We're not necessarily talking Enron and Madoff here, but I mean, if we look at large hedge fund failures, if we look at Bear Stearns or Lehman Brothers, these large companies, financial related companies, sometimes they get greedy too. You know what I mean? Yeah. And it ties into leverage usually. So they're trading on margin or using leverage to try and juice their returns for investors or for themselves or for the corporate earnings. And having too much debt or too much leverage can hurt a common person on the street or a large Fortune 500 company or a large hedge fund. But where I'm going with this is these things are all connected. Mm-hmm. At the end of the day, for all of us to enjoy our days and to spend money and keep moving forward, we need the banking system to function. And for a banking system to function, you got to have trust. You got trust between banks. You got trust between consumer and bank and borrower. Yep. Maybe I'm weaving an extravagant web that's too complicated for people to visualize here. But bottom line, history shows us this too. If people get nervous, if banks get nervous, bad things happen. People start selling assets that are well undervalued, and it snowballs. And that's the housing crisis essentially, and that's what took down some of these companies back in
Well, there's another lesson though there, because it's like I did do a fair amount of reporting in terms of the housing crisis, the collapse of 2007, 2008. Because Corey, I remember at one point, I was doing stories about how people were walking in and getting no money down mortgages for properties that were selling for $1 million and more. No money down. No money down. You like that house? It's great. Because the attitude was real estate never goes down. It's always a winning proposition. This is going to be fine. And not only were they getting no money down, this was my favorite part. They were getting no document mortgages. Meaning I could walk in, or you and I could walk in and say, we want to buy these two houses in Miami. One's $1.5 million, one's $1.6 million. We don't have any we don't need to give you any documentation. We don't need to provide any income statements. We're going to buy these, and the bank, and this sounds like I'm making it up, but I wasn't. I'm not. The banks would go, sure. Okay.
I know it's a head scratcher, isn't it?
I mean, man.
But I remember, and this is another one of them life lessons I kicked myself, because when I say that money's not everything, I do feel like I missed out on making a profitable investment at that time. Because before the crash, I remember getting a postcard every month from one of the national banks that's in our area, that would send out these postcards that says, you can get a home equity line with 125% loan to value. And I remember scratching my head thinking, that doesn't make any sense. How can they do that? How can they give me more money by 25% than what my house is even valued at?
I know.
That I should have known. We could have shorted, Countrywide Mortgage.
Oh, yeah.
Some of these companies that ended up going to zero.
Hindsight. That, my friend, is pure hindsight. Looking back on it, it's like, man, I should have realized there's a tremendous shorting opportunity here.
Yeah. So I can't say that the housing crisis really damaged my portfolio long term or threw me off the rails, but I could have made some more money there.
Yeah, but what's funny about this? And I mean, I know we're reaching the end of everything here, but it's funny because it's like that lesson of 2007, 2008 was a lesson that we had experienced before, which was in the early 90s, which was the collapse of the savings and loans. The savings and loans, let us remind ourselves, were because overvaluations of real estate and the savings and loans getting overextended and then not having the money to cover their losses, and then the S&Ls all came tumbling down. We should have learned our lesson there. We didn't. We went to 2008 and 7, 8 and experienced it all over again.
Yeah.
Essentially. So it's like, Corey, I think to your point, we need to remember that in the markets, at least in the world of finance and markets, there are lessons that are demonstrable, that are demonstrated, and there is no reason for smart people to not take a clue, let's say, and learn a lesson.
Yeah. Wisdom comes with age, as I don't know if somebody said that or if I just said that, but I mean, that's essentially what we're talking about, is kind of learn and understand your history, understand probability of events, and try to connect the dots once in a while. But
two, I think especially with a lot of people now, because there are lots. I'm sure there are lots of your clients who were not alive for the stock market crash of '87 or the collapse of the savings and loans, or who barely remember the Enron stuff. It's that this is where the advice, perspective, sort of, I guess we'll leave it at perspective, of financial advisors can be invaluable.
Yeah, I'm thinking of the old saying, it's not my first rodeo. You want to ride a bull? I bet the first time you get on it, it's not that easy, and yeah, surround yourself with good people that have an understanding or a way to explain reality and what can happen.
Yeah.
That's my old joke. I'm not here painting rainbows and unicorns and promising beautiful things every day. I'm bringing reality. There you go.
Very true. Very true. Now, I know that you have a lot of clients who listen to this podcast, so that they're very familiar with, what you bring to the table for them. For those who are listening and might want to have a further conversation about this and maybe get your perspective, how could they get a hold of you?
Yeah, and we've had a lot of interest in people being able to text us is the new thing too. So I'm going to give you a number which actually works for phone calls or texts. So you can text securely.
Look at Corey getting all modern.
Yeah, I learned something. No, this is secure business texting if you want to, or you can call us. It works either way, but it's a local number, 712-472-3867.
712-472-3867?
You bet.
That's awesome. Thanks, Corey. Well, as always, it genuinely is a pleasure meeting with you on these podcasts and hearing what you have to say and getting your sense of perspective about things. And I know that a lot of your audience are already subscribed to the podcast, but for those of you who are not yet subscribers, this is really easy. You just hit the subscribe button. There you go. Now you're subscribed. You won't ever miss another episode of this podcast. In fact, you can go back now that you have subscribed. It's easier for you to go back and look at past episodes of the Win podcast and do so, because they are very entertaining as well as really informative. And you know what? If you like it, share it with other people. Help spread the word about the podcast. Get the word out there. Thanks for listening. I'm Bill Tucker, the producer of this podcast, along with Corey Heimensen and everybody at Heimensen Wealth. I want to thank you for listening and remind you that this is your opportunity to go out and make today a great day. Or not. It is your choice. Thanks for listening.
Thank you for listening to the Win Podcast. What's important now? The show that helps you achieve your financial dreams. To ask questions about topics covered during the show or get a copy of Stop Doing Dumb Things with Your Money by Corey Heimensen, visit www.heimensenwealth.com or give us a call at 712-472-3867. Don't forget to click the follow button below to be notified when new episodes become available. Securities offered through Securities America Inc., member FINRA SIPC. Advisory services offered through Securities America Advisors Inc. Heimensen Wealth Advisors and Securities America are separate entities.